building a profitable trading system. In this video, I'm going to be running through some key money management principles that you can implement in your trading by the end of watching this video. I fully believe that every single strategy out there has what it takes to be profitable. The only thing holding back these traders from implementing these profitable strategies is simply money management. And the reason I can confidently say this is because this was something that held me back for so many years. You can have the best strategy under the sun, and I'm pretty sure there are some of you right now that have a profitable system, but the only reason it is not making money consistently is because of these money management principles that I'm going to implement in this video. You can go ahead and start using as of tomorrow. See, when it comes to most strategies and traders are not prepared for that turn of volatility, because guess what? It's coming. I hate to be the bearer of bad news, but your perfect strategy that currently maybe hasn't suffered any negative days, negative weeks, it's going to happen. It's going to come. So my advice to you is prepare for it, right? Plan for those volatile times ahead. And the only way that you're going to get around those volatile times ahead is if you prepare those money management rules. So, money management rule number 1, slice your risk up. Most traders currently have a simple system where they simply risk 1%. They're trading on a prop firm. They believe that they're never going to lose 10 trades in a row. But it can happen. Right? It can happen. And the truth is, you don't want to put yourself in a position and your strategy in a position where you're so vulnerable that if it happens, that's your downfall. So plan for it. If you cannot lose the next 10 trades in a row, you do not have a profitable system in place. Because the truth is, the volatility is coming, it is going to catch you by surprise, and you're not going to be ready for it. So the truth is, you need to start implementing that today, right? So split your risk up. I personally love, if I'm going on a period of tilt, split it up some more, slice it up some more. If I'm potentially risking, or I've split my risk into a tranche of 10, that simply means I don't care about the outcome of every trade. I care about the outcome of those 10 positions. So if I'm willing to risk 5% across 10 trades, so that's 0.5% per trade, right? I want to know what the outcome of that was at the end of those 10 trades. So if I come back at the end of those 10 trades and I can look at it and say, fine, I made 2%, not a problem. All that means for me as a trader and my system is I need to repeat those 10 trades as often as possible. That's all I got to do. I need to repeat those exact 10 trades for the rest of my career. And I need to keep repeating those 10 trades. The exact same way that those 10 trades were traded, I need to keep repeating those 10 trades over and over again. That's it. If I'm going on a period of tilt, maybe I'll lose all 10 of those trades. What does that mean? That means I can simply go to stage 2. Simply slice it up into 20. That 5% that I was willing to risk, slice it up into 20. No problem. That simply means at the end of those 20 trades, I now need to know that, fine, maybe I've made 3% after 20 trades. That's fine. As a trader, that means my profitable system sort of barrier is at 20 trades. Not a problem. Make sure that you don't blow up in those 20 trades. And if you can make money out of those 20 trades, your only mission, right? And this is nothing fancy. Your only mission is to trade your next 20 trades and make money from them. That is it. Don't worry if one stops you out. Don't worry if you miss the trade. It doesn't matter. Focus on repeating that process again and again and again. Step 2 of the money management principles that you need to abide. Pay yourself. When last did you pay yourself? When last did you actually pull money out the market and pay yourself? It's very easy to have this big dream of compounding the results forever and ever and ever until you reach millions and your life's going to be perfect. But the truth is, it's just not going to happen, right? Just not going to happen. That dream you keep telling yourself is 0.000000001% chance of even happening. Okay? Rather, pay yourself. For many of you watching this right now, perhaps, I'm just putting the ballpark figure out there, perhaps you haven't had your withdrawal yet, your first withdrawal. Go ahead and make that. How often do you see money on the screen and you just don't press the withdrawal button? What's the point? Right? What's the point? So principle number 2, pay yourself. After 10 or 20 trades, pay yourself. If it's £50, £100, £1,000, it does not matter. Pay yourself. The same way that you would get paid in a job, the same way that you would get paid doing anything else, any sort of labor or whatever, pay yourself because you have implemented your strategy over 10 or 20 trades. Take the reward, right? Take the reward. Take your loved ones out for something to eat, buy yourself something nice, make it tangible, right? Make it tangible in your hand. Keep it in your hand so you know, fine, this is what I got for executing my trades flawlessly. And the reason you want to implement this is because as you scale and as you grow, yes, the reward is going to get bigger. You are going to make more money. But if you do not put these principles in place now, you're going to go on tilt. You are eventually going to start trading with bigger size. You are eventually going to start seeing bigger numbers. And this is going to get to your head. So, in terms of building a profitable system, trade your trades out, right? In a tranche of 10 or 20. Call that your trading cycle. That's what I call it for mine. My trading cycle is 10 trades. I know that if I trade the next 10 trades right now, I will make money. But if I get carried away and all of a sudden I hit 2 big winners and I start getting greedy, it's not going to work. I have to look at my trading in 10 trades. After those 10 trades, I might be able to withdraw something for myself. Great, not a problem. Another 10 trades and another 10 trades. Those 10 trades may take me anywhere between 2 weeks. Not a problem. Fine. Have another 2 weeks. Over and over and over again. So once you've traded out your trading cycle, review it and pay the trader. Why? If you start treating it like a business and you actually pay the trader, that is going to allow you to eventually be able to repeat the process over and over again. We are eventually going to get to the point in this series where I do run through the charts. I do run through what I personally look for in terms of building a profitable system. However, I do believe if you could not sit and come up with a solid money management plan, you can have Jim Simmons, right, give you from Renaissance Technologies, give you some of his strategies. But if you do not have money management principles in place that can withstand that strategy's downturns, that strategy's volatility, you're going to blow up. It's going to happen, right? It's going to happen. So instead of chasing this ideology that you're always going to win, instead of chasing this ideology that you're going to find the best strategy under the sun, start on the foundations. Because quite literally, I don't have a coin right now, but I'll just take this memory card. If you were to flip a coin, quite literally, and I've done this exercise in front of some traders on a trading floor before. If you flip a coin, quite literally, you can make money with correct money management principles over a long period of time. Because the truth is, there is not this proven system without money management. Money management is the proven system. So if you can eventually implement risk management and money management principles on the forefront, doesn't matter what you look for in the charts. It doesn't matter whether you trade macro, whether you trade technically, ICT, it doesn't matter. You can even flip a coin. But where I'm getting to with all of this is have those principles in place. Create a trading cycle, and that's what I want you, I know I've mentioned this before in the previous videos, but I want you at the end of this video to go ahead and create a trading cycle for yourself. And step 3 of the money management principles, guys, is to just focus on those 10 or 20 trades. Just focus on your trading cycle. That's it. Focus on your trading cycle and you'll get paid. Because the truth is, for myself, for many years, I've constantly looked forward way too far. You don't need to do that. You don't need to do that anymore. However, what you do need to look forward to is just those 10 or 20 trades. That's it. Nothing more. If you can focus on the trade in front of you, that's it. Trade that trade well. Manage your risk well. Stick to the plan for that very next trade. Go on to the next trade. Once you've had your 10 trades or your 20 trades, come back to your desk, do a little trade review for yourself, see whether you've made money or whether you've lost money in that cycle. And again, this is the part of the video where I'm going to tell you if your cycle's been negative, so you've taken 10 trades and you've lost money, go to 20 trades, right? So whether you wanted to risk 5% on 10 trades, now you're risking 5% on 20 trades, right? So 0.25 per trade. If at the end of those 20 trades, you still have not made money, slice it into 30 until you get to a point where you actually make money. Until you can look at me, right? If I was sitting in front of you right now in a meeting room at a desk and I ask you, how were your last 20 trades? And you can confidently tell me that, yeah, I'll probably hit the nail on the head for the next 20 trades going forward. Why? I have my system in check. I know that law of probability, right? Over the next 20 trades, I'm going to make money. Because the truth is, you might win 3 or 4 trades. You're like, yeah, forget that trading cycle. I don't know, he doesn't know what he's talking about. You're going to lose the next 2 trades. You're going to give all that money back and you're going to blow up. And then you're going to have to put more money in and try and figure out what's your next steps. So start on 10. If you feel that you're confident and capable enough, and let's say you have, let's make a rule here together. If you have been trading anywhere between 3 and 4 years, start with 10. Anything less than 3 years worth of experience, start on 20. And the purpose of this is figure out a risk parameter that you're willing to risk, right? So if you have a funded account and your risk parameter is currently set at 10% before you lose the whole account, take 5% of that. Break that up into 20 trades. Make money on those 20 trades. Because even if you lose all next of the 20 trades, you're still only down 5%. You haven't blown the whole account and you have to put more money in and you have to keep repeating this process. You don't need to do any of that ever again if you follow these principles. If you haven't made money on the 20 trades, slice it up into 30, 40 if you have to. Because the goal here, friends, is to not constantly put money in the market, but to build a profitable trading system that you can just keep repeating the trading cycles. And if you can keep repeating those trading cycles, you're going to be in 5 years' time. And you're going to be repeating those trading cycles. That's it. It's the only money management principle that I can ever teach you. Obviously, there's risk management that comes into play, which we'll speak about later in the series. But for now, break your trading into cycles. And those 3 steps are enough for you right now. I don't want to overwhelm you on these videos. I want to encourage you to start thinking professionally about your trading. There is no point having this all-in mindset. Trust me, I've wasted a lot of time in the past by not putting principles in place. So take my advice, save yourself the time, the headache, put those principles in place. Once you put those principles in place, you're going to then create trading cycles for yourself as a trader, which you know will be profitable at the end of that cycle. Your job is just to repeat that cycle over and over and over again. But I hope you've enjoyed this video. All right, we're going to end this one there. do know that I am going to, and I'm actually looking at it in front of me right now, I'm going to build out this series on my YouTube, raw, unedited, talking to you about building a profitable system. So if you enjoyed this type of content, drop it down in the comments below, subscribe to the channel, drop a thumbs up, and like always, guys, I'll see you in the next video. Peace.